right, good afternoon. I'm Tom DeLuca from Advanced Merchant Payments. This is my colleague James Lloyd.
Me?
We're here today to explain to you, as bankers, how you could lend to your small business customers in a manner that is most profitable and efficient, utilizing alternative lending capabilities. So what's the problem? Look, we all know that banks have a great difficulty lending to a significant portion of their small business account holders. And it could be reasons such as the small loan amount that they may require, less than 100,000 US perhaps, shorter duration, a loan for less than a year, maybe just to get through a short-term cash flow cycle, and of course of a higher risk profile, perhaps businesses that have no collateral or relatively startup businesses. How big is this problem? Quite interesting. It's almost $3.8 trillion identified credit gap amongst the 510 million micro, small, and medium-sized enterprises. Now, what's interesting, of these 510 million enterprises, there's 355 million of these small businesses that actually have formal bank accounts. That means they've passed banks' KYC, AML. The banks have information related to the cash flow and transaction histories. And yet, for all that information resident in the banks, only 120 million of those small businesses actually have access to formal bank credit products today. So in that regard, the addressable market that we seek to fix is up to 235 million banked clients who don't have access to formal finance today. And it's an addressable market on a revenue basis of as much as $367 billion on an annual basis. So what's the impact on banks? Well, historically what's happened is that these small businesses have gone to the informal economy to raise their money. More recently, I've been reading the papers, it's always discussion of these alternative lenders, which are these fintech savvy companies backed by Wall Street, backed by Silicon Valley, that use advanced data analysis, advanced precision selling capabilities to effectively usurp your clients. You know, basically lending to businesses that exist on the banking grid and then just intermediating them, although they're using your systems for payment collection. Quite interesting. Now the result of this, of course, lost wallet share, reduced customer loyalty from that business, and in fact, ultimate risk of disintermediation from your client. Of course, this is also an opportunity, because the real opportunity is to take those methodologies, these alternative lenders, and use it for your own advantage. And that's what AMP's platform is there to do. We think of ourselves as the bank's alternative to the alternative lending. So how's our solution? The three key elements of it. One is the automated loan origination, referencing information in your databases, particularly relative to the profile of the customer, as well as the cash flow and transaction histories. Now, this is not magic pixie dust underwriting. This is traditional credit risk assessment criteria with particular emphasis upon character and capacity of that business to repay. Of course, as easy as it is to push money out, the hard part in our business, as we all know, is getting paid back. And in that regard, our system sits in the electronic cash flow of these businesses, literally on a daily basis, looking at the cash flow information, automatically drawing loan repayment from that cash flow. This daily interaction with the cash flow on an electronic basis gives us the ability to basically do a real-time health check on that business by comparison to their information when they applied for the loan, but also by comparison to other businesses in the portfolio, which allows you the ability to basically manage your portfolio by exception. Of course, all this activity on a daily basis provides a new ream of data, which is current and powerful, and is immediately fed into our origination algorithms going forward. So our underwriting criteria is always up to date on a daily basis. What's our proposition to the banks? Well, white label processing. We sit quietly and discreetly behind the scenes doing the heavy lifting while the bank puts the products in the market. We offer ease and speed of implementation. We don't ask banks to do any development. We actually map to your existing bank infrastructure, absorbing files that in your output, your existing file formats. We process those files and push them back to your systems in your existing file formats in accordance with the batch processing timeframes under which you operate. Most importantly, the bank is always in control. The bank is in control of your money. We never touch the money. The bank is in control of the underwriting decision. You set the criteria by which you're prepared to issue the loans. Most important, the bank is always in control of its customer relationship. So why us? Well, we've actually put our own money at risk to prove this system. We've eaten our dog food, as the phrase goes. You could take some comfort in that. We've achieved actually on our portfolio in 3 countries and a high return on the portfolio with a very small default rate, proving that you could do this on an efficient, profitable basis. We've done is to test the system, to continue to implement improvements along the way with our algorithms, and frankly, to fund, or partially fund at least, the further development of our platform. But the fact of the matter is, as we hear today at Sybos, we are enterprise ready, ready to go, keen to pitch banks such as yourselves. Now, why us as opposed to some of the alternative lenders that you read about? Well, we are the only ones with which I'm familiar that has a genuine bank-centric approach. Some of these alternative lenders that have big brand names, big balance sheets, they'll approach you as a bank.
Remaining, ladies and gentlemen.
They may approach you as a bank and say, well, Mr. Bank, what we want is your declined SME application. Send them over to us, and we'll take care of them. I'll give you a little commission. But basically, they're disaggregating you from your client. We are the only ones that are saying to the bank, Mr. Bank, we don't want our brand out there. We don't want to build a balance sheet. We want to help you to lend to the customers using the same methods as those alternative lenders. Now, our management team has a track record in building outsourced processing solutions in the payment processing sector, in microfinance, in retail banking, advanced data analytics. This is what we do. This is our pedigree. We build solutions for banks, and we sit quietly behind the scenes. That's what we want to be. So as I bring it home in the final minutes or two, what are the benefits to the banks? Well, clearly, there's a profitable product to fill a significant market demand within your existing customer base, increased wallet share from those customers that you've worked so hard to get, and of course a powerful tool for customer retention and additional merchant acquisition. But if you think about this perspective from your customer, what does this mean to the small business customer? Well, formal access to capital is a very powerful driver. If anybody has friends or family that have ever owned a small business, you'll know that this is not a financial transaction for a small business. Sometimes access to small amounts of capital is a matter of survival, the ability to pay the mortgage or put the kids through school. This is a critical factor, and if a bank can be responsive to that, you will earn the loyalty of that business for a very long period of time. Now, if you take that powerful relationship and you translate that across the 510 million micro, small, and medium enterprises I described earlier, you have the opportunity for a very broad societal impact in terms of creating jobs, economic growth, financial inclusion, and of course governments know this, and that's why they're pressuring banks to react to this. Now, AMP offers a solution that actually allows you to address these needs on a profitable basis that satisfies everyone. So why are we here? The ask. Now, typically in a sales presentation, I'd be asking to win your business at this point in time. But today's business is actually to win this competition. This is a challenge. The criteria, as you've heard before, is which of the innovators here is most likely to have a direct and sizable impact on the financial services sector, and indeed broader society at large. I'd like to request that you decide that AMP is that company, and therefore my ask for you on this afternoon is indeed to have your vote. Thank you very much. I'm wide open for questions. I think we've got about 3 minutes. Sir. Excellent, excellent. The revenue model is a processing fee based upon assets under management, performance-based, if the bank would like to have that, to make sure that we've got skin in the game, maintaining a high ROR on the portfolio, whilst minimizing default loss.
So am I right in thinking that your software goes to the small enterprise and monitors them within the small and medium? So your software's on
No, actually our software resides and interfaces with the bank. So we absorb information from the bank that the small business is already transacting with you, either by cash deposits reliably, credit card payments coming through, any form of what we call electronically verifiable cash flow. And so the businesses that we seek to address tend to be those businesses that have a daily interaction with you in a financial transaction sense.
So you build a picture from that institution?
Exactly, exactly. And again, these are your platforms today that have this information going through it. And they have file formats that you could spread out, so we could absorb those file formats in the time frames you do it. We'll map to that, and we'll turn that information back. So it's information that you have. The question is, how do you make the best use of it? So
excuse me.
Yes, sir.
Your offering is analyzing the information that the bank has.
Well,
It's not something.
Well, it's not just analysis, but that's a fair point. I mean, the bank has this information. What the banks are saying is, how do I do this in an important way? Oftentimes, what banks are doing now is basically fiddling with the edges of their existing underwriting algorithms,
The final
but
minute.
existing loan
Wrap
products.
up, please.
What we're proposing is an entire new method of lending for a segment of your customer base that the existing loan products just simply don't work for. And that's what the alternative lenders are focused on, loans for less than a year, loans to businesses that are perceived to be high risk because they have no collateral. They tend to be B2C oriented, high transaction volumes, and that's your interaction. And they tend to be loan amounts of a small amount. Average loan size probably 40,000 US. So that's probably 1/10 of the average SME loan from most bank organizations. So that's what, if I think about it as an entire system to address a component of your audience that you don't have a product today that suits either on your consumer lending group or your SME group. So, but a great question. So, gentlemen, ladies? The financial model assumes that the bank will want to take the risk. We were very happy to put skin in the game, and that's